have to give it up for KRA because the ITAX is one of their most successful systems. Very little problems. It works quickly and efficiently. So you just need to type KRA, itax.kra.go.ke, and to lead you to their portal. Once open, you will find a lot of things. This is the home button, registration, returns, debt and enforcement, payments, assessments, disputes, refunds, certificates, useful links, e-communication, mileage and logout. In this case, I'll go to the returns, click on the file return, and the type here should be self. The application in this case is the pay as you earn. Notice pay as you earn is a system where the employer deducts the tax due for each month from the respective employees and forwards it to KRA. So the employee receives his or her salary less the pay as you earn. So once that is in, I will come and read all the steps. Click on the links below to download the return form. So the links are here. Then fill the Excel form. Provide the details that are provided. So the details should be the type of return. This is an original. It has already populated for me the date. So this is for the month of November from the 1st to the 30th. So notice I'm filing the return on the 7th of December. So this is the month following the month of the return. The deadline is on the 9th, so I should do it on or before that date. Once I have filled the form, I will choose it to upload and I will agree on the terms and conditions and submit. So let's download the form. It has downloaded here. It's a zip file. So we'll again download the Excel form from the zip. Here it is. Gives a warning that do not cut and paste any values in the workbook. So I'll start with the employer's personal identification number, which I should have written somewhere, or I can get it from the website. So this is here. So after filling the PIN, the type of return in this case is an original. The entity type is the head office. The return period, I'll write the dates from 1st of November 2021 to the 30th of November 2021. And I'll click on next. So in this form, it says employees details. So this is form A for basic information, for B for employee details, C disabled employees details, D computation of car benefit, E computation of insurance relief, F lump sum payment details, G arrears details, H again arrears details, I, gratuity details. J, fringe benefit details. K, PAYE payment credits. M, housing levy details. M1, NITAL levy details, that is the National Industrial Trading Institute details. And the last one is calculation of tax due. So I'll go back to the first one. I'm into B, employees details. So I will look for all the employees and have their details ready. Okay, so after you've input the details of the employee, that is their PIN number and their name. So the next step is to indicate whether they are residents or non-residents. And remember, a resident is not necessarily a citizen. A resident is someone who has earned his income in Kenya, and for the purposes of taxation, that income is taxed in Kenya, whether or not they are citizens of another country. Then the type of employee, in this case, it's just primary employee, directly indicated in the books of the employer. The gross salary, the basic salary, sorry. In this case is the total earnings from employment without the allowances. Now, these other allowances are either given in form of cash or in form of benefit. For instance, a person may be given 20,000 shillings towards paying their rent. So in this case, the housing allowance will be 20,000. But if the employee is given the actual house by the employer, then we shall calculate that under the housing computation, which is somewhere ahead. Transport allowance, same thing. And it's important to note in this case that if every employee enjoys the benefit, for instance, there's a bus that goes to town to collect all the employees irrespective of their status, then that is not a benefit. It's not a taxable benefit since it is given to everyone. But if the transport allowance is only given to one person because of your status or because of your negotiation skills, then it becomes a benefit. And two, it's not a tool for trade. For instance, if you're a salesman and you're given a transport allowance to enable you to move from point A to point B, then that is not a taxable benefit because you were not given it to enjoy. You're given it to work. Leave pay. In some companies, if you don't go for your annual leave, that is the 21 days, it is converted into cash and you get paid in form of cash instead of pay. I leave, that is also supposed to be taxed. Overtime allowance, if you are a director and you earn a fee, so you're both an employee of the company and also maybe a director, in this case maybe a managing director, the fee you earn is also supposed to be included in this computation. Lump sum payment, if any, that might include things like bonuses, performance awards, etc., and any other allowance that is not in this classification. So when you indicate all those in form of cash, you get the total cash pay. So in this case, there are no other benefits other than this basic salary. That's why it adds up to 25,000. Then value of car benefit from computation number D. So if we go ahead and look at it here, if this particular employee was given a car, we would indicate their details here and add the type of car. So maybe in this case, it's a Toyota. Then what kind of board does it have? Is it a saloon hatchback and estate? Is it a pickup? Is it an SUV like a Land Rover or exclusive kind of vehicle? Then what is its CC rating? This is the engine capacity. Is it 1800? Is it 3000? What type of car cost? Is it hired for the employee or is it owned by the employer? Then cost of owned car. How much did it cost the employer this car? And with that, it calculates the value of the car benefit. So the value of this car, the hidden calculations has considered two things. One, the cost of this car, which is 2%, or the stipulated limit of such a car based on its CC rating, whichever is higher. So in this case, the 2% of 3 million was higher than the stipulated rate at 3 million, at 3000 cc. So the KRA or the taxman will take 60,000 as the amount of the car benefit for this particular employee. But since that was just for example illustration purposes, we'll indicate 0, other non-cash benefit. So other non-cash benefit, what else is the employee given? Maybe there's a servant that goes to work in his personal house for his personal errands. How much does it cost the employer to hire such an employee? So those are the other non-cash benefits that the employee might enjoy from the employer. So you indicate if it's there, if it's not there, you don't. So if the benefit is not given, then there's no need to calculate the housing benefit. But if the employer owns the house, then a list of considerations will be taken into account. One of these is the rent of house or market value. If what's the rent value of such a house? Let's say the house is located in a certain area in Nairobi, and similar houses in that area cost a certain amount, let's say 30,000 per month. Is there any amount of that rent that is deducted from the employee's pay? In this case, we'll just indicate 5,000. So that the net value of housing in that case becomes 25,000. That is how much rental value the employer pays for the house, and how much amount of it is deducted from the employee's pay. So that's why it becomes 25. So the total benefit here is 25 plus the additional pay of 25 to get 50. But since this is for example only, we'll go back to the benefit is not given. And when we do that, the employee's total benefits, cash and non-cash benefits, add up to 25,000. Then defined pension contribution benefit. This is the NSSF. It could also be any other contribution to a retirement scheme that the government or KRA allows. So in this case, KRA looks at three things: the actual pay, which is 30% of the basic pay. So in this case, 30% of 25,000 is 75. The actual contribution, which the employee is deducted from his or her salary, which in this case is 200, but could be anything, maybe more than 200. And also the set limit, which is 20,000. So of these three options, the KRA or the taxman deducts the lowest. So in this case, they will take the 200. If the actual contribution was more than 20, maybe 24,000, then he will take the least, which is 30% of the basic pay. But in this case, the least is 200, and that is what has been deducted. Then mortgage interest. Up to a maximum of 25,000 per month. So if the employee has a loan in form of a mortgage, and there's an interest that they pay every month of, let's say, 30,000, the employee will only be allowed to deduct 25,000 from the benefits. So instead of 30, the maximum allowed is 25,000, and that is where we have amount of benefit, the lower of. So from J, that is where we had the pension, that is a 75. So the lower amount is 200, and M, which is the mortgage interest. So in this case, but this employee unfortunately does not have a mortgage, so the benefit comes back to 200. The reason why this is blacked out, deposit on home ownership savings plan, from the reviewed KRA laws, it's no longer applicable. So if you had a plan to save towards owning a home, initially you're allowed to deduct up to 8,000 shillings per month, but now you can not get that benefit. So in total, the monthly allowable personal relief is 2,400 for each person. And the amount of insurance relief, total of amount of insurance relief, so in this case, this particular employee is paying an insurance premium. So this particular employee has an insurance premium of paying 60,000 shillings per year, which is equivalent to 5,000 shillings per month. So the insurance relief is 15% of the premium. So in this case, 15% of 5,000. So amount of insurance relief is 15% of the premium paid every month. So in that case, that will be 750. So we shall put 750 as the insurance relief, and that will mean that instead of paying the previous tax of 200 as indicated, there will be a relief of a further 750, meaning this employee will pay a tax of 0. So in that case, the total tax liability for the employer will be 200 shillings. So with that, we move on to the last part, but before that, I should explain if there is a disabled employee, an employee living with a disability, whether blindness, wheelchair, whatever kind of disability that is approved by the Kenya National Association of Disabled Persons, then they should be included in this case. And whatever the allowances, whatever amount of allowances that they have, if they do not exceed 150,000 shillings per month, then that person will be exempted from paying tax. So they'll only pay any tax above 150. If the total taxable amount is, the total tax liability is 200,000, they'll only pay the excess of 150, which is 50,000. If their total tax liability is anything below 150,000, then they shall pay nothing. So the last part is the calculating the tax due, which has already been calculated in our last page. It shows the number of employees, everything as the details, and then we validate. After we validate, it shows there's an error. We have excluded some things. Global income in the case of a full-time director should have been indicated as 0. The other errors are in relation to the car benefit, which we had indicated for purposes of illustration, but which do not exist. So we shall remove all the details about the car benefit and then go back to the tax due, and we validate again. So on validation, give it just a few seconds. On validation, it goes well. Sheets are ready to be uploaded. Do you want to generate upload file? You say yes. So it has already been saved in your documents account. So now you can go back to notice the date 07/12/21 and time 1916. So that now when we go back to the main page of KRA, we will choose file to be submitted. And this is in my documents. Notice the date. It's here, the 7th of December at 7:16. We'll open it. We'd already agreed on the terms and conditions and submit. Once we have submitted, you can download the returns receipt, or you can check it out in the registered email. So I'll not download it, I'll just check it out in my inbox, but then I'll go on to payment. So remember, I have only filed the returns, I have not made the payment. So this information will automatically populate itself. It's an income tax, it's self-assessment. The tax period is November 2021, and the tax rate is pay as you earn. It tells me that I have a liability of 200 shillings, and it will ask me how do I want. Yes, I'll add it as what I want to pay. So it's totally easier. Mode of payment, I'll pay with other payment modes, which in this case is M-Pesa, and I'll submit. So I'll download my payment slip. And it shows me all the calculations I've done. Sorry, it shows me the tax amount I have to pay, that is 200, and I'm done with filing the return for pay as you earn for this month, so I can comfortably log out. When I pay, there'll be a message on my email that the amount has been received. In a case where the organization has a lot of employees, let's say 10 or 20, then it would mean that the workload would be a lot, where you have to fill in every PIN of the employee, every name of the employee, the residential status, type of employee, their salaries, the housing allowances, etc. Should have to do that for each and every employer. Luckily, there's an easy way whereby if you have the employee payroll, you can convert these into you can convert it into a .csv document. So for pay for November, I will click save. And when I'm done, I will close it, such that now I will just go to the employee's details. Instead of filling in every employee's detail, I'll just go to the pay CSV document and open. And within a fraction of a minute, I have input the data of more than 10 employees all at once. So now I'll just verify if this is the correct amount, which is, and within no time, can be able to calculate the tax due, which is 15,028. It's ready to be uploaded. So in case you need the CSV format, just check in the links for a download format, which you can include now the details of your employees and use it.